Just got in puts here, 510 puts, 1 DTE. Reason for being this red zone we had here was obviously our main level of demand. Buying pressure, buying pressure, buying pressure, right? The 510, 511 demand. Not only that, that was also right below the hourly 200 EMA. Obviously, 200 EMA has been a really strong set of support in many, many sessions up until today. At the opening bell, we lost it immediately, tried to recover it, rejected, and this is the follow up bear flag forming below. We did have some reversal attempt here off of this green annual trendline support. However, we failed to hold above and we started to trade right back down. And that's a pretty big indicator when you see demand weak and say you're in the call side position, it's time to flip the switch and play the downside because when you don't see any demand, when you don't see any buying pressure within the demand zone, an area where you should see buying pressure, others are taking over and the downside is likely. It does not mean we're going to see like a very long term, impulsive crash. It just means that this demand zone currently just doesn't have enough juice and we shouldn't look to go long. Now, it would have been a different story if we held above the demand zone and continued to make its new highs like this, but it did not. Instead, it side. So that's why we decided to go short there. My entry trigger here was this candle right here. As soon as we broke, we retested. You see the wick and the candle below. So I got inputs there up like literally like 5% on the zero DTs. Not too much, but I do think that sorry, not zero DTs, 1 DTs. I do think that we can at least test low of the day here, 508, 509, and it'll probably do some bounce again, consolidate. I don't think we're gonna lose the green trend line today because that would be actually really bad, and we're gonna see some more of a impulsive pullback, maybe even down to the 505, 500s. Um, but yeah, just let me know.